like it's my year.
Good morning, everybody. Happy Thursday. This is, of course, the morning show here on Stock Market TV. Spencer Israel, Steve Strazza. No JC today. No JC today. He'll be back tomorrow. Don't worry. But this morning is a Strazza show. There we go. Strazza show. Welcome to the Strazza show with Steve Strazza. And actually, Sean McLaughlin, who normally joins us Thursdays at around like 9:30. He'll come on a little earlier this morning and hang out with us. It'll be a good day. New guest on the show today, Anthony Crudele. You might know him from Place Your Trades. You might know him from any other number of things he does. And he's a large Twitter following. He'll be on the show about a half hour. Talk to us about what he's trading, what he's watching, how he approaches markets, and yeah, JC ain't here, so you know what that means. We're doing some earnings. ABNB, Robinhood. I want to talk about Roblox. Holy crap, Roblox. Have you seen that thing this morning? Getting killed. Anyway, that's the show. Smash the like. Let's go. Hello, sir.
All right. I didn't know we had a special show today. I would have brought more charts.
Oh, that's all right.
And nobody tells me these things.
Hey, nice shirt.
You like it? It's like
Still
a joke.
No, but obviously we have one now. So
this was
nice.
Old conference gear, old crypto conference gear.
So what happened? They had extra shirts after the approval, so they just crossed it out.
No, I got this like 2 years ago, maybe at a conference.
But now it's crossed out.
Oh, maybe this is no. I got this one in Miami a few months ago. You're right after the approval at that
Got it.
Exchange.
So they were like, we have all these old shirts that are no longer relevant. How do we fix them? Got it. Smart.
I see what you're saying.
Yeah.
So another big week for earnings.
Mm-hmm.
I guess we'll do state of the markets, and then I just want to kind of hit earnings.
Yeah. So, I mean, me too. But that's all I ever want to do. So, all right. We'll do a quick state of the markets and we'll go into some earnings. Let's go. Little mixed out there, Steve.
A little mix? What?
Little mixed overnight session.
You want to read it off? I don't have that.
I mean, I'm looking at the S&Ps, which is more, down 2 points, so that's flat to me. Crypto in the red, gold up, oil up. Yeah, let's see. Europe up, Japan, Europe up, Japan down. Like I said, mixed.
Yeah, nothing really stands out here. Pretty muted in terms of futures markets. Crypto's up slightly. Nat gas is lower. Crude's higher. Aussie yen, some stuff going on with these currencies still. Seems like a snooze fest out here this morning. I think we should talk about let's do the prior cycle highs charts, Alfonso. Maybe even just get the hot corner deck. See, we're behind here, Spencer.
I'm not behind.
I'm
good to go.
Yeah.
That's okay.
So we've had a string of, I believe, 6 straight up days now for the Dow Jones Industrials.
That I can't speak to the Dow, but yes. In terms of like S&P, I think is at 6, right?
So 6 straight days of gains. Is that, and S&P's not at 6, but is that something that you typically see during correction?
I guess it's not. No, but didn't we just sort of have that? So this is
so you're saying
the market
correction over.
I mean,
Maybe.
I mean, does the market go up 6 days in a row during correction? You just asked it. Isn't this a way of saying, okay, moving on, right?
Yeah, I'm with you on that. We have a couple tools at our disposal that we could use just as signposts, right, to help us determine if this little corrective wave is behind us. I think the VWAP from the pivot highs is a big one. So if you're charting along at home, for something like the Russell 2000, you have a peak in April. For different indexes, typically the market cap weighted ones, you have peaks in March. If you look at some of the sector ETFs, you might have peaks going back all the way to January. So just anchor VWAPs from those points. And as they're recaptured, what that tells you is that buyers are back in control of the short-term trend, right? We know the primary trends are higher for most of these indexes. We're worried about this little short-term corrective wave. An AVWAP from the year-to-date highs, I think, is the best tool right now to kind of determine who's in control over the near term, right? The bulls or the bears. And what happened over these past 4, 5, 6 trading days, right, of gains is that a lot of these VWAPs have been recaptured. Another tool that we've been using is these prior cycle highs. We have the prior cycle highs checklist. So for every hot corner video the past few weeks, we've been throwing up this table, Spencer, of about 20 different symbols. We have added some. We've added Bitcoin, and I think this one doesn't have RSP in it. Yeah, it does. Okay, so we've added Bitcoin. But what these charts all have in common is that they reclaimed the prior cycle highs from late 2021, early 22, and then they fell back below them, right? Had some sort of hard retest or a little kind of shakeout, turning that old breakout into a false start in most cases. So all we did was simply say, okay, as this list turns more green, looking at the column all the way to the right-hand side, we'll know this little corrective period's behind us. That's happened. Do we have last week's? Just for context?
Right, just for comparison's sake, it didn't look like this.
Throw up last week. So Europe was already above those prior cycle highs, all the European indexes for the most part, but none of the sector spiders. So none of these US sector indexes were. Materials regained it. I think financials are really close. Yeah, so that's what it looked like last
yeah,
week.
nice.
Bottom. Something like S&P high beta, you see 5 rows from the bottom, that reclaimed. Retail reclaimed, right? Equal weight NASDAQ. So a lot of big ones now back in the green zone. I think we could start adding more risk, adding more exposure, and betting on this bull market continuing into the back half of the year. What say you about that?
Well, like you said, and I think you said this yesterday as well, right? Bulls in control. That's what a reclamation of those VWAPs indicate to you. So bias to the upside. Now, this isn't a perfect list, obviously. Not everything is on here.
Yep.
There are other ways to look at breadth, but this is one way. And this way indicates that bias to the upside.
Yep. And we're aligning the time frames, right? What this checklist tells us is we're back above these, key former highs, which we kind of expected because the primary trend's higher. It was more a matter of how long does it take. I think the VWAP is a new list that we'll make. Or maybe we just add a column here. I think that's what we'll do. We'll just add a column to the right here and say above or below year-to-date VWAP, because that then tells us about the tactical trend. So if we could align those trends, really stack the odds in our favor, I think that puts us in a good position to win for the next quarter.
You could also look at the indexes and just say, we're still below resistance, which I guess is true.
Which ones?
All of them?
No, we're not. That's why this list is green. So let's look at some of them. For example, let's just go right on down the line. Let's start with the equal weight S&P 500.
Oh, I'm not okay. I wasn't referring to equal weight, but sure. Okay, fine.
But so when you say overhead supply, you're talking about the pivot highs, right? They have not achieved new all-time highs.
I'm talking about all-time highs. That's what I'm talking about.
I'm describing tools that we could use, right, to get in before the indexes make new all-time highs again.
Yeah.
Right? Like in anticipation of that. Sure, confirmation for a lot of the stuff that I'm talking about probably happens at new all-time highs, right? But I think you can jump these entries by using the VWAP from the year-to-date highs. Tells us buyers back in control of the tactical trend, and that we're probably going to go on to reclaim those old all-time highs. You know what I'm saying?
Nifty trick. No, I mean, I like it because it's, you know, and if JC were here, he would probably say you get what you pay for in life, right? So maybe he would rather wait for that confirmation. Then that's his prerogative, and your prerogative is to try to jump it. And I like that.
JC is a more conservative confirmation guy. I'm always looking to jump an entry in the bull market.
Yeah.
And you're right. He would probably say you get what you pay for. So equal weight S&P 500 back in the green, just ever so slightly above those old highs. It's about 164.50. So we're literally right there. What's next? Equal weight NASDAQ, not quite there yet. The key level in the equal weight NASDAQ is 121. Just a little bit off. Next. This is a big one. It's a big one. Mid caps, right? We want to see that strength down the cap scale. We want to see participation from mids and then smalls. And
yeah, but we're not seeing it from smalls, right?
We're not seeing it from smalls, but you're going to see it from mids first, right? So we're at least moving in the right direction. So mids back above that key level from 2021. What's next? All country world index.
Don't forget about the rest of the world.
It's a lot of US. You could say, hey, is this really that much different from the S&P 500? If you go look at the top holdings, you would say it's probably not. But this does include about 40% ex-US exposure. We like this index a lot. We use this as like a global benchmark, right? If we're looking at any country ETF or diversified index, okay, bench it against the ACWI, right? This is the total global stock market back above those prior cycle highs. What's next? No shots fired at JC. Don't be a troublemaker.
Yeah, no one's taking shots. Who's taking shots here?
If I'm gonna take a shot, you're all gonna know it.
Who's taking shots? I didn't hear a shot.
Euro stocks 50. This is the largest 50 stocks in the European Union. Back above those prior cycle highs. What a clean retest too. I really like this one, right around $49. What's next? India. This is our emerging markets leadership asset
indicator.
Yeah, so we've included India as kind of, because EEM doesn't look like these charts, right? We couldn't put EEM on this list. It didn't reclaim those old highs.
Thanks, China.
It's been the leader. Phew, China, man, that would be on a list of charts that are trying to reclaim old prior cycle lows. So India back above those old highs, looks strong. I don't think it's really where you want to be in EM, but it's good information. What's next? Russell value. How about these value stocks? Large cap value stocks. The breakout is in. The retest is in. Let's go. What's next? Mega cap. No, this is this MGK? Yeah, this is Vanguard Mega Cap Growth. Should be ticker symbol MGK. About 265 is that level. Those prior cycle highs. Another really clean retest.
I feel like, hold on, when you start talking about like Russell growth and Russell value,
yeah,
I feel like you're getting a little bit too in the weeds for me. Like what? Like why do I need to see? Why do I need to wait to see confirmation from like the Russell Value Index? Like why?
You know why that one's in there, Spencer?
Yeah, tell me.
Because so many of these other indexes are dominated by these Mag 7 names.
Yeah,
I need one that didn't have them. And sure, there's some sprinkled in there. I get it, but it's a lot better. You know what I'm saying?
All right. I mean, I guess I just don't really care.
The same 5 stocks tend to be the top holdings in a lot of these, which is a problem.
Yep.
Russell 1000 value does a good job of not.
But that's why we have the equal weights up here to counter that. So
absolutely. So we actually put a lot of thought in this to try not to overlap too much.
Yeah. All right.
Somewhat different. What's next? How's this one for equal weight?
Sure.
Woo-wee.
Better.
Nicey composite. Looking good. See how clean these charts are? I've been on here for the past couple of weeks. What have I been saying, Spencer? It's a bull market. There's no place I would rather enter.
Primary uptrend.
Those old highs, those prior cycle highs. Do you see these retests were a gift? We're not trading these.
They always seem like a gift in hindsight, no doubt.
And some worked, some didn't. But I'm going to look back in a couple of months and say, wow, those were great entries. The ASMLs and the
sure. No, every time.
for yesterday. Maybe not the AMD, right? You win some, you lose some. What's next? Yeah, we'll go shopping after this.
Ooh.
Van Eck Retail.
All right.
How you doing?
Now we're cherry picking a little bit, right? But
You don't like it? Why are we cherry picking? Retail, U.S. consumer, so important. These are economy stocks. Tell me I'm wrong.
I mean, what are we talking about here? We're talking about the gap, right? That's what we're talking about.
I don't know what's in this ETF right now.
I'll tell you what's in it. Give me 10 seconds.
A lot of Amazon, and I like it. That's fine. 7% Amazon.
Yeah, all right. I mean, yeah. All right. Yeah, okay. Wow, that's actually Amazon, Costco, Home Depot, Walmart. All right. And Lowe's.
Keep talking shit. What's next?
Target. All right, fair enough.
What's next?
And corrected.
This is I think this is the biggest one. This is what I highlighted on our video yesterday. High beta stocks, right? Offense, risk on. The kind of stocks that I want to see working. Make me feel nice and warm and fuzzy about this bull market. S&P high beta back above those prior cycle highs. So good. So good. What's next? Not quite there, but this is happening. This is happening right now. Go watch the Hot Corner strategy session from yesterday. We talked all about financials, the big banks. I don't know, Spencer. You jumping this breakout? You getting long Wells Fargo with us?
I mean, look, I already own the insurance ETF, so I don't need to jump this.
How about some bull market financials, Spencer? You're such a safe guy. Speaking of conservative, I own the insurance.
What capital market stuff?
Yeah.
You're talking about that.
How about some community
that trade that TW?
Yeah. How about some TradeWeb? Yeah. How about that?
Yeah.
You like that? You into it?
I mean, I've seen the chart because we talked about it the other day.
Let's show Spencer Morgan Stanley. I want you to see this Morgan Stanley.
I mean, I've seen Morgan Stanley. I know what that looks like.
Absolutely blow your mind.
Yeah,
blew my mind. What is that? That don't look like Morgan Stanley.
What I want to know is Goldman Sachs still in that range? Oh no,
dude, Goldman. The breakout is in the books.
Yeah.
Tell me this is the best chart you've seen all week.
I don't know. The best chart I've seen all week is, but that looks juicy.
25 years.
Yeah. Okay. I wasn't looking at that part of the chart, but yeah. All right.
This is the kind of chart we saw from semiconductors like 4 years ago, all over the place. We were calling them .com bubble bases. Morgan Stanley's gone nowhere for 25 years. Morgan Stanley. Banks are ripping right now. Look at JP Morgan. Look at Wells Fargo. Look at Goldman Sachs. Goldman Sachs would be their closest comp.
Yeah.
Look at the chart of Goldman. You're going to tell me this 25-year base after we spent the past several years absorbing all the overhead supply still stuck at this level? This is perfect.
Nice.
So I'm long. That's what Morgan's going to look like soon. You gotta catch up.
Maybe you're right.
This is a strong group. This is exactly where we want to be fishing. And if charts in financials are looking like this, these are some of the largest components. We're talking about the big banks, some of the largest components of XLF, obviously. They're all breaking out. Throw up a Wells Fargo. Let's just beat this point home. If they're all breaking out, looking so good, what is XLF going to look like? As our list is turning more and more green, as all these indexes reclaim their prior cycle highs, throw up the Spider financials. This breakout's going to be in the book soon. So we were adding some exposure yesterday. I think financials continues to be a really, really good place to.
You know what heavy or large financial or XLF holding does not look like this? It's Berkshire Hathaway.
Looks better. I see what you did there. That's nice. Berkshire's an investment company. Berkshire's a fund in and of itself, right?
I know. I'm just making a point.
No, you're not wrong. Let's just finish this out. Let's finish strong here. We had to do a little financials bit there. What's next? Energy.
Oh man, energy.
Looked like you got a just classic retest. Then we were going, and then it plunged. So this one is wait and see mode right now. Energy's been such a mess for so long, but if you zoom out on the chart, it really does look better, and you want to earn the direction of that underlying trend, which is still up. Next, give me some materials. That's it. No materials. All right. XLB also back above. So I think I'm making the point pretty obnoxiously clear, which is that as more and more of these are back above their prior bull market highs, we can feel more and more comfortable adding long exposure and getting ready for the next leg up in this primary uptrend. So I think
Primary uptrend certainly holds a little more weight when the short term is also an uptrend, right? Makes
there
it easier
you
to
go.
digest that. So
Next time we talk about this list, we'll do the VWAP thing.
sure, that's good. Good thought. Let's do some earnings before Anthony comes on.
Please, can you run a bumper?
Yeah, sure.
Thanks.
You want to start with Airbnb? Let's start with Airbnb. What the heck? We're down this morning in the pre-market.
I thought it was fine.
PS 41 cents versus a 22-cent estimate. Sales also beat 2.14 versus 2.06 billion dollars. The Q2 revenue guidance was on the light side. The high end of the range they gave was the estimate, so the midpoint is below the estimate there. So like I said, down this morning, it said that 500,000 people traveled for the solar eclipse, which blew my mind. But there you go. Joel's 5.0 in the chat bought some Airbnb puts yesterday. Nice job.
Yeah, I thought the report was fine. We'll see how this shakes out. I might get stopped out of the shares I bought. Robinhood.
Robinhood, Q1 EPS 18 cents versus a 5-cent estimate. Sales of 618 million versus a 548 million dollar estimate. Last I checked, shares were up slightly. Trading revenue up 59% year over year. A large chunk of that increase is due to crypto. Crypto trading revenue up 232% year over year. Options revenue up 16%. Equities up 44%. Speaking of options, they said Q4 of this year, they will be launching index options and futures trading on the platform.
So what did we talk about the other day? I said Coinbase is a great read here, right? So even though only a third of their transaction revenue comes from crypto, it's most of the growth in transaction revenue comes from crypto. The expectations for earnings coming into this quarter, Spencer, 1 cent. That's why the stock's doubled off the October lows, right? We went from expectations of EPS of 1 cent to I think they came in around 18, almost 20 cents. So
yeah,
I mean, this one's really come a long way. Expectations are ticking higher, and they're going to have to do more. This was more of a trade for me than anything, but Coinbase ends up being a really, really good read for Robinhood's earnings.
That's what you said. That's exactly what you said yesterday. Coinbase is a good read here, and they're like I said just now, the crypto trading revenue was arguably the reason for their trading revenue increase year over year. So stock up a little bit. Let's do one more, and then we'll bring Sean on, and then we'll bring on Anthony. What do you want to look at? Let's look at maybe. You know what? Do we have Roblox? Can we look at that Roblox chart here? It's getting absolutely creamed here. What is it down now this morning? A lot. Last I saw was like 25%. Let me get an updated number on that. We are down 27% now this morning in Roblox. EPS beat, revenue beat, bookings beat, guidance. They did lower their Q2 bookings guidance, but the revenue guidance was okay. All right, and their full year guidance was okay. So whoever it was in the chat, I said Roblox is confusing. I hear you, because it's getting creamed today, and the numbers are mostly okay. So go figure.
Here's what's going on. The market is being very, very hard on these speculative tech names. So they're still pre-profitability. What was the earnings?
They lost money. Right. They're not profitable.
It's really hard to lose money in this market. That's what happened to Uber the other day, right? Just yesterday.
Yeah,
their report was fine. The headline number was negative EPS. I think it just freaked people out.
Yeah,
these growth companies have to be profitable in this kind of environment. Capital markets are very different from what they were a couple years ago when you could just go to the debt market or equity market even, right, and raise capital. It's no longer the case for these guys. So, yeah, the moment is now for these companies to turn profitable, and if they're not doing it, they're not going to be rewarded by the market. I think that's all this is.
We have a couple more. I want to bring Sean on, and then Sean's going to hang out with us for the rest of the show today. It'll be fun.
Good.
What's up, boys?
Yo, how we doing?
Well, now with me and Anthony coming on, the show's about to get a lot better looking.
Oh, okay. I hear you.
Yeah.
Nice
So I just want to chime in real quick. You guys kind of passed over it, but I know you guys were just talking financials a little bit. And man, I don't know if Strazza mentioned Wells Fargo, but I mean, Wells Fargo seems to be showing the way, so to speak. It's just been stair stepping higher over the last, let's call it 4 months. Yep. Gotta love it.
Bought more yesterday. I mean, this thing, it legs up, it coils, it legs up, it coils, just keeps climbing up the right-hand side of this massive, almost decade-long base. Really good. Did you see the Morgan Stanley chart? I want to show everybody. Did you see it?
Yeah, I saw it. That looks, I mean, we could be on the cusp of something big here, right? Could be. Not saying we are for sure. Nobody knows. We don't know. Nobody knows.
Financials, and it's never bad for the broader market, right? The way I learned it was you can't have bull markets without financials. I don't know if that's still true today. I really
was
don't.
Just going to say the same thing. I know that when I started, that was the trope. Like if the banks are rallying, then that's good for the market. If they're not rallying, then heads up.
Banks are utilities. So I wonder how offensive they really are anymore. But
yeah. Well, I mean, let's think about it here. If the banks were not rallying, and if we were not seeing strength in some of these big cap names like Google, I mean, Google's looking great too. If Google and NVIDIA, I don't know.
You cover those short NVIDIA calls?
No, we're still in it. We remember when we put that NVIDIA trade on, we had a lot of room, and that was why we liked it. And so that lot of room is playing nicely right now. We are short the 1100 strike calls in June. So we have a lot of room left, although my stop is at 1,000. So if we break 1,000, I'm going to close it, which depending on if and when that happens, might still be a profitable trade owing to the fact that we sold calls so far out of the money.
We're still like a week out from the report, I think.
I should be clear. We're short calls and puts. We're not just short naked calls in NVIDIA. I like to sleep at night. Actually, let's be even more clear. We're short an Iron Condor.
There we go.
That's a very different trade. I should be
very
clear here.
Yeah,
we are short an Iron Condor. We do have defined risk in this trade. Again, I like to sleep at night, and selling naked options in NVIDIA would not allow me to do such a thing.
All right. Why don't I bring on today's guest, Anthony Crudele? Place your trades, and let's see what's on his mind.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, man. It's good to have some Chicago in the house. This is great.
What's up, Sean?
How are you, Anthony?
Doing great. Steve, Spencer, how are you guys?
Good. How are you?
Thanks
for
coming.
Excellent.
It's been a minute. It's been a minute. When I see guys like Anthony on TV, I get a little homesick for Chicago. As many of you know, I lived there for 11 years, and I loved every minute of it. I still miss it. So great to have Chicago blood on joining us. Hi, what's it like out there in Chicago now? I mean, I know there's.
Well,
not
I'm in
much,
Florida now, buddy. I live.
I know
in
it's
Florida.
all.
I made the trade, man.
Oh, you moved to Florida? See, I didn't.
Yeah, I gotta keep this glow, baby. I moved out of Chicago, man. That they were sucking the color out of my face, man. I needed to get some sun, so I moved out to Florida. And,
Where in Florida?
Yeah,
I'm in Naples, Florida.
Oh, sweet. Very nice.
Wow, you and Citadel escaping Chicago, moving to Florida.
So hold on. Did you guys know each other back in your Chicago days, Sean? Did you guys like hang out and do Chicago things together or no?
I don't know. I think we crossed paths a few times. We had some common friends, but we didn't hang out a whole lot.
No.
So I think, yeah, go ahead.
I think didn't you one of your mentees, a guy named Eli Radke? Does that name ring a bell? He was a friend of mine.
Yeah, Eli worked for us on the trading floor for a while.
That's right. That's right.
That was probably about 15 plus years ago.
That was what I wanted to ask you. When you got started, you cut your teeth on the floor, right? Were you a floor trader?
Yeah, I was at CME.
Right.
The Merc.
The Merc, right. Yeah. And you spent a few years down there, but then you were one of the early guys. Correct me if I'm wrong, but I feel like you were one of the early guys to make the transition to the screen. Is that correct?
Yeah, the E-mini S&P came out at the end of '97, and at that time I was actually I was an ARB clerk at that time in the Eurodollar options, and I was going and really interested in the electronic side of things because, you know, obviously I was hoping to be able to trade them while I was clerking, but really at that time, which is crazy, is that you actually, unless you were a member, you couldn't even trade them, right? Like if I was working as a clerk on the floor. So in '98, I started going through membership, and I started trading off the floor electronically, and I would trade in the pits in the morning. And so I went into it right away. I mean, it was only maybe a few thousand contracts a day when I started to trade the E-mini. It's hard to imagine.
Yeah, you're one of the few guys, I think. I mean, you and I both know a lot of ex-floor traders, and a lot of those guys and girls couldn't make the transition to the screen, and they've either completely left the business or they're still in the business, but they're really, really grumpy about it. I know a lot of those guys.
Yeah, you know, and I mean, they're just two totally different things. You know, like I wasn't a successful pit trader, and I was forced to go to the screen. The screen was a blessing for me. You know, but I think the biggest thing, and people always ask me, is why do you think that many of them couldn't? I think it was the physical act of the way that they actually came in and actually physically traded in there. So you came in and it was just like, you know, they're using their hands and they're active without really having to be active. So they're bidding and offering all day long. You know, you're trading with brokers, you have leans like when you're leaning on a broker, and just like the mindset was very different. And when you get to the screen, there's just too much access, which I think is the problem for most people anyway. But especially for a pit trader that's used to really being like a market maker, to come in and do that on the screen, I think was challenging for many because they're just too used to the physical aspect of it, and most of them overtrade.
And you had just such a unique viewpoint in the pit of you could visually see order flow. You could see who it's coming from. You could see if it's what you guys on the floor called paper, which is customer order flow coming in. Yeah. You knew if it was, you know, the big dog of the pit who's covering a short position. Like you knew all that stuff. And when you went on the screen, all that information went away.
Yeah, I was actually one of the first desks. I actually had a computer where I was able to look directly into the pit. And there was maybe only a handful of us at the time that did that. That was a really interesting time. It was a fun time.
I mean, what you're talking about here is I experienced that a little bit, but in a different way. I started trading stocks in '98, and I traded at the end of the old NASDAQ era, where you would see a level 2 screen of all the bids and asks, and you would see the names of the banks of the players who were on the bid and who were on the offer, and you would see actual size of what they were buying. You would see if they're trying to buy 1,000 shares or 100,000 shares. All that information was there, and you could see it. It's not as great as what you had in the pit, but it was pretty damn close. And then NASDAQ, and I think it was 2001, maybe it was 2002, they changed the rules, and everybody went anonymous, and they went to these anonymous exchanges, and everybody could fake their order size. So there could be a bid, you know, bidding $100 on the bid, and it looks like they're only bidding for 100 shares, but really they're trying to buy 100,000 shares. But you never knew, and so all that information went away. And so it's similar to what you're talking about when these traders went from the pit, where they had basically all the great info, and then they went to the screen, and it was like a whole new ball game.
Here's a little bit of history for everybody that trades the E-mini S&P. When I first started to trade it, you can see the entire order book. If it was 100 points away, you can see every order. That's number one, which is crazy, right? And there was no risk management software like there is today. So for example, I could come up there and I could sell 1,000 e-minis and the broker really wouldn't even know right away. So there was no restrictions on how many I could buy or sell. That's basically where Fat Finger came into play. And, you know, I was actually there when some of the biggest Fat Fingers happened, and we were just like, whoa, we used to, you know, there was no limit to how many e-minis you can buy. So for just a guy like me, with the time I probably had $25,000 in my account at the most, I could have bought 100 to 500 e-minis and nobody would have known, right? Because in the pit, they didn't stop you from doing that, right? So I can go into the pit with no matter how much money I had. If I bid even on 100 and a broker goes sold, I own 100. So they didn't do that for the screen. And eventually, through the Fat Fingers, they started putting restrictions in, size restrictions. All of that eventually came. But I was there when it was just raw, man. You could see everything. And, you know, one quick thing is like you go about to see who you were trading with. I mean, there were so many times I remember, like I would go in there and I'd buy like 5 or 10 e-minis, and I would see like 350 or 560. That'd be Goldman or Merrill. I'd be like, fuck, I better get out of this one. If I was buying from them, and I turn around and burn out of it. So it's pretty funny. So
Are you still trading today, Anthony?
Yeah, I don't day trade every single day anymore, but you know, I remain consistent with watching it. I really am more of a swing type trader with futures now. I mean I'm definitely not a scalper. Back then I was a scalper big time. I mean that's all I did. Now, you know, I really try to find one direction, stay with it, and you know. But I'm looking at it every morning. But I'm just pickier about the days I choose to trade now.
So you lengthened your time frame as you kind of got older. Is that just for have a nicer life, to get away from the screens a little bit every now and then, or you found something that, you know, maybe longer time frames work better for you?
You know, I think that it's a combination of both. Number one, the feedback, you know, the way that I was really trained myself to become a successful trader was scalping, and I was in and out all day long. But you got to remember too, back then the S&P wasn't even at 1,000, and then even I did it all the way up until probably close to about 10 years ago, where I was super short term. You know, a price move, a 1% price move intraday wasn't that big, so therefore you could trade bigger. You know, you could truly scalp for ticks, right? You're not going into right now to trade the E-mini NASDAQ or the E-mini S&P and try to make ticks. You're just going to get chopped up. And so, number one, the feedback told me I've got to widen my time frame. Otherwise, I'm just going to continue to lose money. So that's the first. The second thing was, I think at some point, you know, you start to realize, especially as I grew my account, that I wanted to have a stronger hand in the market, right? I don't want to be trying to be a two-way tape trader all day long, trying to be perfect, right? And so I started to really slow things down, become more of a market environment person where like, okay, do I want to be long? Like I write a free note every morning. I put it on Twitter, Discord, wherever. And I talk about what direction I want to trade in. And if I get that set up, I take it. If I don't, I don't, right? And so that's the way I have felt. I've really increased my hand, my strength of positioning by doing that. And I really get hyper-focused on the one side. Versus the old me would be like, oh, we're at resistance now. I didn't get the long. Let me just get short for $2. And eventually, you know, I don't want to be fully gray. So I figured, let me just look at one side of the market. And it's really been good for me. You know, I would say this, and I'm very open about it. You know, my best years as a trader was probably like 05 to 2010. But we also had global financial crisis. The markets were crazy. You know, I took on a ton of risk. I'm not quite getting to those exact years, but I'm getting pretty close at times. You know, like COVID was a great year. You know, there's other years, but you know, we're all, you know, it's all about, is the market environment conducive to my strategy, right? And so I don't know when those great years will come again. They may, or they may not. But nonetheless, you know, I'll know that I'll come in and I can control in my own world.
Pretty interesting. So as markets kind of evolved and became more and more advanced and became choppier over the short term, you simply adapted strategy.
Yeah, I mean, I forced to. It's either that or I'm out of business, right? I mean, if I try to do what I used to do then, I'm done. I mean, it's just, there's no way I would scalp, you know, 50, 100 lot E-minis for ticks I mean, there's just no way I'm fast enough now to do that. And I wouldn't even attempt to do that in the NASDAQ, so it's like, eventually it goes back to the pit guys. Do they want to come in and change their psychology a little bit? Do they want to come in and change their strategy? If not, they're not going to make it. But if you want to do it, then you have to adapt to it. You find a way.
Yeah.
Let's put a little context here for Strazza. Strazza, I'm not sure if you realize when Anthony talks about having a 50 lot or 100 lot on in the S&P Mini, and that moves one tick. One tick is worth, and that's in that size, Anthony, correct me if I'm wrong, but we're talking about a $5,000 difference. I mean, you're moving $5,000 per tick, the value of that position, right? In a 50
lot.
Yeah,
on a 100 lot, it would be $1,250. So it'd be $5,000, a point, which
right.
Really nowadays a tick is almost.
That's one tick, Strazza. That's one little blip, right? It's nothing.
Relate to that. Yeah.
So imagine if you've got a 100 lot on and your position is moving $5,000 per tick, and all of a sudden we have some news comes out and the S&P spikes 5 points, which happens all the time. I mean, you're sitting on a monster win or loss. I mean, depending on which side you're on.
Just hearing this is giving me anxiety. You guys are freaks.
It's a totally, but you go back to it when volatility was lower, for example, like if there was an offer and I'd see like buying come in, I just take the offer out because I know just from just reading the tape that I could turn around and scratch that trade. The goal was to scratch the trade. The goal is not necessarily to make money on the trade, right? If I felt I could scratch a trade, that to me is like raw scalping, because at that moment I'm being able to take on risk, knowing that no matter how big I'm in, I can probably get out of it. So if I see size moving into the bid or into the offers or going against it, you're just turning. And so even if news were to happen, back then also too, news wasn't as fast. Nowadays it's much quicker to hit the tape. But even then there was a little bit of a buffer time where I would just burn out of it. You'd take a big hit, but you'd a lot of times catch them too. It's kind of like, no matter what, you weren't scared that those losses would occur, but at some point, you'd probably get a run in your way. So they would balance out.
Yeah. So Anthony, what products are you focused on trading these days? You're not strictly S&P E-minis and the NASDAQ E-minis, are you?
Yeah, pretty much. I mean, I trade a little bit of crude oil and gold. I don't go into silver. Silver's owned me. I'm silver's bitch. It's and I say that, it's funny because it just seems like my timing in that market it's like, it's so hit or miss, but I like gold, oil, I trade 10-year. I trade actually 10-year quite a bit. I used to trade the ultras a lot, which I'm not going to get into the difference between the ultras and the 10s. It's just a more focused 10-year. And so there's 10-year futures and then there's ultra 10s. And so I stick to the majors. I don't get involved in ags and all of that stuff very often. I mean, it would be once a year I'll trade those markets.
Mm-hmm. So from your vantage point where you're sitting now, what's your overall feel of the market? Let's stick with the equities here. So NASDAQ, S&P, what's your sense? Are we consolidating here, getting ready for another leg higher, or do you see some trouble on the horizon?
I'm bullish. And I think that the recent low is a low that the bulls can build on. I look at it, I go back to where I'm at now and where I really have been for the last decade, mostly is really a market environment guy. And I look for good highs or good lows where I think that the markets can build on. I mean, you could tell that, when the E-mini futures, even the S&P futures start getting really, bearish, and you can see that everyone's, here's one great thing about futures is that when we start to go down, it's very transparent through the order flow that there's sellers out there. So if you're a big portfolio guy or whatever, you want to immediately hedge risk, you could buy VIX or you can come in and sell S&P futures. And so S&P futures, when we're going down, it gets crowded really fast, right? Because everybody is basically going out there trying to manage risk, and the futures are the easiest way, most capital efficient way to step in and manage risk against a big portfolio. That's what futures are built for anyway, right? And that's really goes back to the transparency we had with the pit, where we could see if there's a huge amount of sellers, we were like, something's going on, right? Because the S&P, let's face it, it's built to go higher. So what I look for when it's going down like that, I use some simple technicals. I like Bollinger Bands and maybe a couple of other things. And I look to see when it just kind of gets a little bit overdone and you start to see that rotation back up. And you can feel that the volatility, and I say feel, it's part of looking at technicals and also just feel of the tape, that vol's getting sucked out of the market. No one's in a race right now to put hedges on. Hedges have been put on, and now they're unwinding a little bit, or those that have put them on are staying with them. And so to me, that's a good low. And so I think the high is not a good high. And so I think that the market is going to drift towards pushing to the high.
So are you actually buying weakness into these support zones, or you're buying strength after the weakness into the support zones? I saw something on your Twitter. You're talking about ultimately increasing your risk reward or stacking the odds in your favor by buying at or above these polarity zones or support levels.
Yeah, I think that when you think about trading a bull market, which is really where the market I initially learned how to trade in the late 90s, you learn that you can have the best support levels, and especially in these days markets, which I think are different from back then, they'll stay really, really steady in an uptrend. Yeah. When you come back to support, what I'll do is I'll just trade smaller, and I'll step in a little bit above support if I want to be long, right? And so I know I may not get a full position on. I know I may not get, a bunch of contracts on, but I'm able to participate in the rally and still have a wide enough stop. So I'll keep the same stop, but I'll step in smaller above entry. So if I'm bullish, like I am now, it gets to support. I mean, intraday is one thing, right? If I come in and right now I'm looking at 51.99 as support this morning in the E-mini S&P. If it gets down there, let's just say I'm going to buy 3 minis. I might buy one at 01 and just watch it. Now my stop will be like, let's say 95. If it gets to 99, all of a sudden I might buy 5 or 10 or more because I'm watching the response there. But I think that most people try to be so perfect that, it usually they end up missing it. I'd rather be small and participate than not at all.
In uptrends, what tends to happen a lot, from my experience, is you'll get pullbacks and you'll draw out this, perfectly logical support level, but the market won't tag it at all. It'll stop and reverse before even touching it, and then you can miss it. Another thing that happens a lot is it'll blast right through it and then bull hook higher, some sort of whipsaw move higher after shaking below the support level. It's very rare out in the wild to just get some clean retest of support.
100%. It's so true. And it's like, if I'm going to get stopped out, I'm getting stopped out no matter what. Now it's a dollar amount risk fixed at that moment, right? And so I'm just going to be smaller. I widen my stop a little bit because my entry is a little higher, but nonetheless, I'm going to lose the same if I'm wrong anyway. So I look at it like this, if the response is really good, let's just say it goes to a level and then it holds, then I'll add with it. Then I'll add with strength, but if I want to be a buyer, I tend to just smaller in front. And it's just a simple thing I put, and going back to that tweet, if I want to be long, I'm buying at and above the area that I want to buy in, small, and just keep my stop the same. And then also, if I wanted to be short, it would be the opposite. If I'm a seller in a bull trend, I'm only going to sell at and above area because I'm going to trade closer to risk. Because why would I want to sell into strength right at resistance? I'd rather sell above resistance, closer to my stop, and look for the rotation almost back to my level, because that's the likelihood of what happens. We all know that when we want to sell something in a strong tape, it usually goes to our area. We either get filled if we want to be short. It goes a little above it, and then it comes back and it keeps testing our area. And we're going, oh, man, is this going to be good? And we don't know, right? And eventually, that's why I try to rotate above it back to it. And, that's just my thought process.
Now, I love what you're saying, because, how many times have we heard repeated ad nauseum that losers average losers? Like, if you buy something and it goes down, you buy more because you're trying to repair your position. And people get themselves into trouble that way. But you're doing it very deliberately with a plan. That's a very different animal, right? You're buying a little bit because you might not get your full position on and you want to participate. But you actually want to buy it lower, and you're waiting for the market to come down there, and then that's where you'll get your full position on. But you want to have something in case you were early, or I'm sorry, if you were, if the market wasn't going to come to your price.
Sean, you're 100% right. It's a range of execution. I look at it as a range. I don't look at it as a binary price, because I'm never going to be perfect. So why commit to trying to be perfect? It's impossible. And maybe I might be able to get a perfect haircut, Sean, but I'm not going to get a perfect price execution.
You lead the league in perfect haircuts. I'll give you that for sure.
So,
but perfection is such an important topic to talk about, and it doesn't get talked about a lot. It's very easy for people to think, especially if you're new in the game, that to be a successful trader, you've got to be the perfect execution guy. You got to get that perfect price, and you have to have that perfect exit and that perfect profit target. And yeah, that looks good on paper, but that's not reality. And if you're measuring yourself based on perfect executions, you're setting yourself up for frustration, disappointment, and underperformance. That's my take.
100%. You're always going to be chasing. You're always going to be chasing perfection, which you will never reach.
Yeah.
Anthony, before we let you go here, I want to give you a big shout out just for your role as an educator and a teacher in the world of trading. I feel like I've been following you, at least listening to Futures Radio, for like almost 10 years now. Are you still doing that?
Yeah, it's 10 years. It's crazy. This year's 10 years I've been doing it.
Yeah, you've been doing it a long time, man. Long time.
Yeah.
So what have you gotten from that experience? Like, did you just wake up one day, hey, I want to share everything I know, my knowledge and wisdom with the world? Like, what made you do it? And then I guess, what has your experience with it been? What have you gotten out of it?
So quick story on how Futures Radio even began. I used to do financial media from the trading floor, CME Group, when I was back on the floor, when I still lived in Chicago. This is going back probably close to 15 years now. I was doing CNBC hits. I did maybe a couple Fox Business hits. And the CME media team had come to me and said, what do you think about it? And I'm like, to be honest with you, I said, they don't ask me anything about futures. They're asking me about utilities. And I'd sit there like, with that stare to the camera, like, man, I don't know any even stock in the utilities, right? Like, you're just asking the wrong guy, and so I said, if we're going to really help people get into the futures markets, then we need to talk about futures. I said, I'm happy to talk about, something with you guys to do it. And I would go back and I would trade on my screen. Well, they came to me and they're like, we love this idea. What would you do? I said, how about a podcast? I said, I'd love it. I said, I'll bring on some people that I know from the floor. We'll start talking about it, and ultimately I went and started Futures Radio Show podcast. So, I was going to futures events and, just talking futures really. And even back on Twitter, then no one even really knew, kind of what futures even were. And so then it became, a passion for me. And then I had a heart attack at my screen at the age of 36, which I've been very open about. And really just opened my eyes to like, what, man, you've been a hardcore scalper for 15 years of your life. Start opening the door to other things. I actually started doing other things just outside of trading when trading was just my life. And the podcast became a big role in that.
Yeah. Well, thank you for 10 great years. It's one of my favorite podcasts. So that's really awesome.
Thank you, Steve.
I'll bet Strazza's favorite episode was when I was on. Anthony, you had me on like, I don't know, 7 years ago, a long time ago.
I know, buddy. We got to get you back.
Anytime, buddy. Anytime. All right, listen, we have it on the tape. Anthony's bullish. I like it. Me and Strazza are bullish. Our friend JC's a little bit lukewarm on the bull case, but it's good to have some people who can see the market clearly, Anthony. Thank you.
Thank you, guys. I appreciate it. Love your show. I really appreciate you having me. Thank you.
All right, buddy. Take care.
Spencer, are you here to take us out?
There you go. All right.
We'll have to
Anthony,
reach out.
man, he's one of the good guys. One of the good guys from Chicago.
Yeah. One of my favorites, really. This is the first time. What do they call it? Long time listener, first time callers. First time I ever really got to talk to him. So that was a lot of fun for me. Sean, we got to reach out to him and get him on our new podcast. I think he'd be great.
I like the idea of that. Yeah, for sure.
I don't remember who suggested I get him on. It may have been Sam or someone from the chat or someone emailed me. I don't remember.
If it was Sam, give that kid a raise.
Whoever, it was a few months ago now, but whoever suggested it, thank you.
I'm an Anthony fanboy. I think it was me. I'm taking credit for that one. Also, what? I'm serious. Shout out Jason Shapiro. Sean and I just had the coolest conversation with him last night. Some of these pods that we do, I want to just keep going. We could go another hour, but just his brute honesty and how genuine he was and just sharing his experience being a trader. That was so much fun for me. And I can't wait for that episode to come out.
Yeah, that one will come out for the public in about 3 weeks or so. I'm not sure exactly when, but that's definitely one to look forward to. Strazza and I definitely had a great conversation with market wizard Jason Shapiro.
Good guy. We got to find a way to get up to Rhode Island, have a beer with Jason.
For sure, 100%. All
right, Spencer, you got more news for me?
Rhode Island.
Yeah, Rhode Island, man. Charlestown.
What do you got against Rhode Island? Good golf courses there.
No, I've been to Rhode Island. I've been to Newport, right? Very nice town.
Hey, my first job in finance has a tie to Rhode Island. My first job out of college, I was a mutual fund salesman for MetLife, if you can believe that.
Hey,
and MetLife they sent me to Rhode Island like a week after I graduated college. They had a training center in Rhode Island. I had to spend 2 weeks out there getting brainwashed in the MetLife way. But it was great to be out there. Played golf one day. Beautiful golf course right on the coast, right, overlooking the water. It was amazing.
Rhode Island is one of the prettiest places.
Yeah.
I love it. It actually reminds me of like the Keys in a way, but on the top of the country.
Yeah, I was there in the summertime, so it felt like the Keys. It was beautiful.
It's like
beautiful,
cute little quaint little beach towns. So we have some news. We didn't talk about the iPad stuff, the Apple iPad news.
Yeah, why are people so bent out of shape about this commercial? I have no problem.
Sean. Thank you, Sean. It's been 2 days now, and I still don't understand why I'm supposed to care about a freaking iPad commercial.
We talk about this so much. The iPad is a large cap business in and of itself. This is incredibly material. This isn't just this is what do you mean? People are just missing Apple still. I don't understand it. All of their products matter. Okay. The iPhone is obviously very important, but 40 billion in sales for the iPad, this is material. This is not a snooze.
But why are people so bent out of shape about this commercial? That's the thing I don't understand. I
know nothing about this. There's some.
I think that's what Spencer's talking about, right, Spencer?
Oh, that's what you were talking about.
That's what I'm talking about. There's like this huge backlash. People are like really viscerally upset about this new commercial. Have you seen the commercial, Strazza? You know what I'm talking about?
Oh, wow.
They have this commercial, or it wasn't a commercial. I think Tim Cook tweeted it out a couple days ago. It was this video introducing the new iPad. And basically, I thought it was really cool. They had like all these physical manifestations of all the things the iPad can do, right? Like a radio, a TV, a record player, like all these things. And they put them on a flatbed and they just crushed it.
Good.
And then they revealed the tiny little iPad that does all the things that all these products do. And I thought it was really cool. And it's nothing new. Like people have been talking about this for years, that the iPhone and the iPad like takes the place of a million different devices all in one. So Tim Cook sends a video of what that actually looks like, and people are all freaking bent out of shape about it. I don't get it.
Listen, Apple's never been one to be afraid of making a splash with their advertising. It's ingrained in their corporate culture. So pissing people off a little bit, that sounds about right. Good for them. I don't know.
I don't know, man.
It does sound cool.
I just can't bring myself to get upset about a commercial, like, and not just this commercial, any commercial, except for the ones that have like annoying jingles, like those suck. But like this one,
I'm getting pretty annoyed about the betting commercials, but that's a whole nother conversation.
Yeah.
I get annoyed when they come on in the middle of the game and they do their little side panel of the TNT guys talking about FanDuel. It's like, bro, I got a phone in my hand. I've gotten 18 notifications already since tip-off. I don't need Charles Barkley coming on the screen reminding me to go bet. It's a little bit over the top there.
It's unseemly.
Do you remember, Sean, when I was growing up, the billboards on the highway, it was only cigarettes, right? No, seriously. Anybody remember?
No, you're right. And then when I moved to Florida in '98, all the billboards were for strip clubs.
That's still the case. That's still the case. But no cigarettes. That's changed a lot. So I think this is just one of those things where we got to deal with it for now. Do I expect to be sitting here watching an NFL game 5 years and every single commercial is FanDuel or DraftKings? I don't think so. I don't know. Guess what? FanDuel and DraftKings, this is just a first mover, just setting up kind of situation where the marketing spend right now is just really heavy. That also won't last forever from their side. So, this is, I think, just something we got to deal with for now. But boy, is it obnoxious. I agree.
I don't know. Let's do a couple more earnings, and then we'll go to some other stuff here. Let's talk about the trade desk. Revenue. I'm sorry. EPS beat, sales beat, revenue beat. So it beat across the board for TTD, and stock's flat. I mean, it's up 3% this morning. So
I like this chart.
It's cousin TradeWeb is doing a heck of a lot better. TW.
Mm-hmm.
They're not cousins. This is like a big data cloud company.
That's true. That's a great point. Yeah, the trade desk is like advertising, like programmatic ads.
This is the
So
same as Datadog, MongoDB, isn't it the same, right?
no, the trade desk is like when you see like
I think it's the same thing.
like an ad for DraftKings on your
Yeah.
smart TV, right? In your game, like during the like the trade desk made that happen, right?
Okay,
So,
my bad.
All right. App lovin'.
Yep, I got that one too.
Did this chart look so good? Do we have this chart, Fonz? We gotta get this chart up here.
EPS for App Love and APP was a nice beat, 67 cents versus 57 cents. Revenue was a nice beat as well. Revenue's up 48% year over year and beat the estimate. Guidance for the current quarter came in above estimates as well. So looking good for APP, and we're up 10% this morning, but dropping off the open.
So this one was in a basket of stocks that we were looking at very closely last year, and with the UiPath and Net, Sean, and I think I stayed away from it simply because it reminds me too much of Superbad, and I can't take it seriously. I don't think App Lovin' is really the best name. Am I wrong? I was like, this has to be a meme stock. I almost tossed it out and just looked at the others. I don't know. I don't know. So that was my personal experience with it. Maybe something a little bit more professional, but it's fun. It's fun.
Ba-da-ba-ba-ba.
Yeah, it sounds like it's something I can get for $5 at McDonald's. What else for earnings?
Warner Brothers is down this morning. Surprise, surprise. Their earnings were not good. Also, they announced that they're bundling. They're bundling their streaming platforms with Disney, so you'll be able to get Disney Plus, HBO Max, and Hulu together.
Who knew? They're bundling. They're partnering and bundling these streaming companies. Yeah. Wow. And then they'll unbundle, and then they'll rebundle, and then they'll add, an ad-supported one for $3 less a month.
They already have that. They already have that
money, and then they'll crack down on passwords when they've really, really hit peak growth.
Yeah, it's just a rebundle. So anyway, they did say they have just under 100 million subscribers on their streaming operations. So that's mostly just HBO Max. But cool. Thought that was interesting. Stock sucks, but what are you gonna do about that?
Hey, we had a little comment there in chat. Situation Room mentioning that Amazon all-time high. Look at that. He's right. Amazon looking great.
So
it's not a bear market if Amazon's making all-time highs.
Sean, it reminds me of Google. It's from a month or two ago.
Yeah.
Holding up really well. I was just overlaying the Mag 7 with Bitcoin. The more that these stocks keep working, Mag 7 index is just about at new all-time highs. Made a new all-time high the other day. Is Bitcoin really completing a top?
I don't think anyone would make that case.
Am I too simple though, or here? Let's just.
Well, on what time frame? I guess maybe I should clarify, because we've seen this stair-step pattern repeat itself over and over and over and over again in Bitcoin on a longer time frame. If you're just talking about over the next 6 to 12 months, maybe it's a top, but I don't think so.
I got a chart for you. All right. Throw this up. I ran this for, who were we talking to about this yesterday? Spencer. Who was our guest yesterday?
On this show yesterday?
Was it Mr. Todd
Adam
Gordon?
Kush.
Adam Kush.
Adam Kush. Yeah. I gotta send this to Adam. Just throw it up. The correlations come off. I think I'm running a rolling quarterly. Correlations come off, but is it in there? Yeah. I don't think you want to bet on these two assets moving in different directions for too long. If you've ever done that in the past, you've gotten burned. Got the chart? The chart's in the morning show chat.
We got it. There we go.
Right? So I'm thinking, okay, Google, shout out Amazon making new highs. Nvidia's right there, right? Apple's trending better now. So I don't know. The more these mega cap techs do well, the more I'm looking at Bitcoin like, come on, we've been going sideways for a couple months now. So we'll see. I don't love the past couple days action in Bitcoin. That's why I'm kind of bringing it up. That's why I'm thinking about it. I don't love heading back lower after the nice little shake and go, couple days of follow through. Now just rolling right back over to that little breakdown level. So we shall see.
The downtrend in Ethereum was like super clean. Just like you draw a very straight trend line down there.
Lower highs and lower lows.
Yeah. Anyway, there was a couple more things. If you're wondering what got into Zscaler yesterday, right before the close, they disclosed a data breach. The stock is flat today, but they did talk about.
So it's just a bad look when you sell security, digital security.
No kidding.
And you've got no security,
and you have a data breach at your own company.
Like who was it?
A group of companies that shouldn't have a data breach. It's cybersecurity companies. It's just
years ago. I think a few years ago, FireEye had a data breach. This is before they got taken over by Google. But FireEye, and it's like, wait, you guys do cybersecurity?
Somebody bought them?
Yeah, Google.
That stock was a disaster forever.
Alphabet.
Yeah. Are you thinking of Mobileye? No, that was Intel.
Nope, I'm not.
Yeah, I remember FEYE.
That's right.
Traders loved that one.
Someone in chat asked about Duolingo. I mean, I haven't looked into it super closely, but like it's getting smacked around today. It's down 20%. Their earnings, I mean, the headline numbers were okay, and their guidance was good. So you'll have to do a little digging to find out.
This is a tremendous
before you say it. Yes, they were profitable. They were profitable.
Story. Hot corner name. The insider buying in this one just over the past year and a half has been absolutely insane. It's just not one I've been able to wrap my head around. Who does this? Who has time?
I mean, I have the app and I haven't used it in probably 2 years.
Who has time? So is it one of those things where like you buy the app, you pay for a year, and then like you're cleaning up your subscription?
I've never even paid them money.
I don't get it. But the numbers look good. People like it. Fundamental people like it. I don't understand it. I don't know how. Learning a language? You learn languages in school. I don't know. Sean, you have time to learn a language in your free time? Spencer, what are you thinking? Go read a book.
I would rather read a book, much rather read a book than do Duolingo. Also, I saw a thing the other day. It said like that your peak time for learning new languages is when you're 7 years old.
Oh,
so
it's true. It's true when you're younger. Yeah.
Does this have one of those app translators that Sean and I could have used in Asia? That
like Google has that.
Me and Sean are talking to people in Asia like.
Thankfully, we didn't have to do too much of that. We were pretty lucky, but yeah, we did do that from time to time.
Anyway, Steve, speaking of Hot Corner, do we have anything there today?
Yeah, I could say
yes,
something.
no, maybe so.
Who can we call a piker today?
You don't have to if it's nothing good. Wait, Fawn says we do. Fawn says we do.
And Fawn.
So hot right now.
Fawn says Axis Capital Holdings is a nice chart. I haven't looked at it yet. Insurance, property, and casualty. That would be a piker.
Connecticut.
200 grand. I don't know this one. AXS. Yeah, it's a sweet base. Look at that momentum. Really nice couple of weeks of action here. So that one stands out today. This I.2, we don't have the chart for, but keeps popping up on our list. Remember, Spencer, we were talking like end of last year. Oh, they keep buying the biotechs. That's really cooled off a lot.
Yeah, I haven't heard that mentioned in a couple months.
But this is one that keeps hitting the list. And then Penn National Gaming, that's one of those charts that you kind of like want to like even like cover your eyes to look at. Trends shouldn't look like this.
I kind of forget they're around, actually.
Yeah, it continues to be a disaster. All right. I was Barstool Sports is also just like becoming a disaster too.
Well, that's not Penn.
I know it's not, but it used to be.
Yeah.
I was thinking about it. I was like watching a video this morning. I was like, this is just getting really bad. I think they've gotten too big.
Perhaps.
You know, I was thinking we could do a show where instead of me coming on and talking about trade ideas for the market, I could just come out and talk about trade ideas for my Hard Rock bets, right? Do like, you know, parlay Wednesdays.
Wait, Hard Rock Bets, is that a betting app?
Steve would use Hard Rock. He lives in Florida. He would use Hard Rock.
I have no choice, sir.
Yeah. Anyway, listen, guys, the Hot Corner, it goes out every single day. It's a free note. The link to sign up is in the description on YouTube.
I guess what I'm trying to say is I
Also-
think I could definitely make better sports content than Barstool.
Maybe. I don't know. I was never even in college. I was never a Barstool guy. So
I was.
I don't consume their content. I don't know.
Were they? Yeah. Is that because you were too far south? I know they started as
I was more of a Deadspin guy back in the day.
I don't even know what that means.
Yeah, well,
I was
all
a
right.
GC campus guy back in the day.
It's a defunct sports blog. Rest in peace.
All right.
Rest in peace and peace. All right. What else? Oh, before I forget, if you guys missed it, JC and Sean did a special live event yesterday talking about options and how to profit in choppy markets. I threw the link to that video at the very, very top of the description on YouTube. It's there. It's free. Check it out. Sean will walk through sort of how he goes about selling options to get paid. And
yeah, it felt topical because we're coming out of a period where, it feels like we're coming out of a period where we had a lot of sideways, choppy market action, right? We've had a lot of indecision in the markets over the last 2-3 months. And, JC and I talked to a lot of traders and a lot of hopeful traders. And we sensed a lot of frustration from a lot of people over the last 3 months, getting stopped out of a lot of swing trades and directional trades. And we felt that now is a good time to, hey, let's discuss ways we can make money in sideways choppy markets. It's good to have these tools in your toolbox. As an options trader myself, one of the things I'm very fortunate to have is the ability to alter my strategies based on the current market environment. And so I don't need to have a bullish market environment necessarily to make money. I don't need to have a bearish market environment necessarily to make money. I could do it in a sideways market. And so JC and I kind of went through some examples of things that traders can do when the conditions are such that, hey, there really is no direction in the markets right now. And we don't want to commit too heavily in either direction. So here's some things you could do to kind of ride out the storm, earn a little income, build some portfolio diversification to ride out any storm that might be coming. So all those things we touched on that, and I think it helped a bunch of people for sure.
It helped me, so I appreciate it.
Well, if it helped you, then we hit the mark. We hit the mark.
Help me too, Sean.
All right.
Hey,
Steve,
Sean,
what is this chart? Toast?
Well, I want to do one winner and one loser from the past few days.
Ooh,
man!
Sean,
talk about a chart that I forgot about.
What's that, Strazza?
You eat the fake meat out in Colorado?
I do not. I have eaten the fake meat, and mixed results. Some's okay, some's bad, but it's not something I do regularly.
I feel like Spencer does it regularly.
What? Beyond Meat? No, I bought it once. I tried it when it first came out a few years ago. Thought it was, not as good as the real thing, and that was that.
I had a period in my life not too long ago where my wife and I experienced sampled a vegan lifestyle. We tried to eat vegan for 3-4 years, and I got nothing bad to say about it. We ate great. We didn't really do a lot of the fake meat though. I mean, we did occasionally just to mix things up, but it was kind of, I didn't hate it, but it wasn't great.
So vegan is no meat.
Right. No meat, no dairy.
No animal.
Yeah, no. So like no eggs either, right? Is that one?
Right. That was the hardest one for me because I love eggs.
Wow, 3-4 years though. You did pretty good. That's pretty crazy. Hey, when I see this chart of fake meat, I think to myself, when zero? I don't know. Is it a zero before the end of the year? How much time is left for Beyond Meat? Are these still in stores? Like, do you still see this?
Oh yeah. It's definitely a thing. I mean, I gotta say that chart surprises me that it's done so poorly. But I think part of the story there is that it probably overshot on the way up. You know, like it was kind of like the new hype, the new thing, like, oh, this is going to change the world. And of course it didn't. But I think Beyond Meat and Impossible and all these similar products, I mean, there's a place for them and they'll be around. I mean, should they be multi-trillion-dollar industries? No, but they'll be around. They're not zeros, I don't think.
I wonder though, if the chart looks like this, the company's not making any money selling this stuff. Are they, were they just subsidizing their own products, selling them for, less than they cost to make? Why can't they make any money selling them? I don't know. We'll see. Prices might be going up for the fake meat out there.
I was trying to make a chart just now, but it's taken too long. I was going to show the Beyond versus Beyond, because you have Beyond Meat and you have Bed Bath & Beyond.
They're both terrible.
Yeah, but Beyond Meat's better.
Are you saying Beyond is the jinx word? If you have Beyond in your name,
I'm
then
saying
you're
long
doomed?
Beyond and short Beyond is what I'm saying.
Spencer, one of them already went to zero, didn't it?
Yeah, Beyond, the BYON that I'm referring to is the old Overstock. So, yeah.
They took their name?
Huh? What happened is Overstock bought the e-commerce assets from Bed Bath & Beyond.
Wow.
And then they changed their name.
Terrible.
So, anyway.
Is Overstock like Wayfair?
So supposedly, I've never actually bought anything on Overstock before, but it's been around for a long time.
Me either, but I was shopping the Way Day deals last week.
Oh, shoot. Is that over? Damn it. I got served a bunch of ads and I meant to.
Got a rug. Yeah.
Hey, wait, what is this chart of toast? Bring that up. Do we have that here?
Second one, fresh reversal. These are the patterns that we've been buying for so long now. This one's just coming out of its base. I really like it. This is restaurant software.
Point of sale.
POS.
POS.
Oh yeah, I see those things all the time. Those toast things. Sign up and get like rewards or whatever if you're a frequent purchaser at a restaurant, right? Is that what they do?
Yep. This is a Josh Brown favorite. Shout out JB, who was talking about it on the TV yesterday.
That's a good. I mean, as a technician, Strazza, I like that chart.
Yeah. Oh yeah, I like the chart too, for sure. Maybe give it a couple days here, right? Let it give us something high and tight, right? This base breakout level.
Wait, what's the other one? It's called a light speed, right?
I don't know, Spencer.
Light speed point of sale. Did I make that up?
LSPD?
Yeah, that's right.
Mm-hmm.
Very different chart.
Chat's on fire, by the way. I don't know if you guys are noticing.
Chat's hot today.
Jonathan says, vegan's a lifestyle. I eat nothing with a face or a mother. And then we got another guy chiming in. Plants have a mother. It's called Jesus. Shout out, chat.
Alrighty then.
Good stuff, chat.
All right, should we do some recess and get out of here?
Yeah, slow day. I got nothing else. Let's go.
All right, good deal.
That light speed, though, does not look like toast.
What?
The light speed. Light speed. I was just looking at the chart.
Yeah. It's bad.
Yeah.
I know. All right. My recess was going to be about the Knicks, man. I mean, sure.
Yes. Let's go.
I don't know. So here's what I told my buddy. I was like, I think the Knicks are going to win this series in 7 games, and they get absolutely blown to pieces by the Celtics in the next round. But at this point, they're playing with like 5.5 good players. So if we win this series, it'll be a minor miracle.
They're gonna get tired. So basically, the Knicks starting five, they play like the whole game. These guys.
Mm-hmm. The whole damn game.
Anunoby last night was just like, I was like, where did that come from? Almost like 30 points.
Yeah.
In the third quarter.
Sean, how is sentiment in your household? Nuggets don't look too good.
Oh man, I think the Nuggets have been exposed. Minnesota figured them out, man. I don't know if you guys saw the highlights from that game the other night, but Minnesota absolutely demolished Nuggets in game 2. Just it was an ass whooping from start to finish.
Yeah, they got whooped. It was embarrassing.
Yeah, the saving grace for Denver is that they have a very unusual 3 days off between game 2 and game 3. I don't know why they played on Monday night. The next game's on Friday. Like,
yeah, that was weird.
What?
I don't know why that is, but hey, we'll take it because the Nuggets look like they needed the rest.
I hate that, man.
It's not like college basketball. In March and April, these college kids, they're playing basketball literally like every other day. It's crazy. NBA.
Speaking of playing every day, we haven't talked about this in a while, but let's talk women's hoops for a second. These top draft picks that just came out of college women's hoops, like Caitlin Clark and Angel Reese and all them, they're right back at it right now. The WNBA season is starting right now. They're right back in it. They have no break. Like those girls at the end of this season are going to be exhausted.
Yeah.
Well, and also a lot of them, maybe not like Caitlin Clark, but a lot of them will then go play overseas when this season's over, because
and
make
they're
more
playing
money.
in the Olympics this summer.
Oh, I forgot. Oh, you know what? Airbnb did talk about the Olympics in their earnings call and in travel, but yeah,
Taylor Swift too.
Yes, they did. Olympics, right? Olympics are in July, so that's awesome.
Yeah. All right.
So,
hey, for recess, let me take another corner. I got a shout out. Shout out science.
Yeah, you like science?
What?
Science
What's he talking
rules.
about? So I had a little knee surgery on Friday. Little minor knee surgery on Friday, and I went into it. Maybe my doctor is just really good at managing expectations, but heading into the surgery, he had me go pick up at the pharmacy like all kinds of like high-end painkillers, like things that I'm gonna need because for the next 2-3 weeks, there's a good chance I'm gonna be in a lot of pain. Well, I did the surgery on Friday morning. I was out of there by 9 a.m.
What?
The surgery started at 6:30 in the morning. I was out of there by 9.
Wait, hold on. Was it outpatient or were you like in the hospital?
I was in a hospital.
That's absurd.
You got starting at 6:30 and out by 9. Yeah,
that's ridiculous. That itself is a miracle.
So the surgery happened. I was awake for the whole thing. They didn't have to put me under. It was localized in my knee. They went in, did some arthroscopic scraping stuff out, and then I had this procedure called PRP, which is platelet-rich plasma, I believe that stands for. They basically took my blood and then put it in a machine, spun it up, isolated all the white blood cells into a really concentrated form, and then injected that back into my knee to help repair the tendon that I had a tear in. This is why I'm doing all this. And anyway, I walked out of there on my own feet, no crutches, nothing, on Friday morning at 9 a.m. And it's now been, 6 days? And guys, I've not experienced a moment of pain. It's unbelievable. And I haven't even been taking any painkillers. Nothing.
That's cool.
I mean, I'm walking with a slight limp, but it's probably more mental than anything. I'm just kind of overcompensating, making sure I don't screw anything up because I'm supposed to take it easy for 2-3 weeks. But no pain, guys. Unbelievable. Shout out science. I was worried I was going to be, sucking painkillers for the next 2 weeks, but no, it's been great.
All right. Bullish science. I'm with you. That's good. Good for you.
Painkillers are science too, Sean.
Painkillers are science, but I haven't had to use them.
Yeah.
It's been great.
Good for you, man. Sounds like it all went well. All right. Let's hop out of here. We got things to do, places to go, people to see, charts to look at, stocks to trade. We're doing a jam session today, Thursday. That's today, noon Eastern, as always. And then chart requests live at 1:00 with Patrick and Steve. If you have any requests for the guys, email them. questions@stockmarketmedia.com. Thanks to our guest today, Anthony Crudele. Thanks to everyone in the chat for hanging out. We appreciate you. The comments, the questions, the likes. Where are the likes at? Let's get some more of those. I like likes. We need more. All right. Anyway, have a good one. We'll see you. Go make some money. All right.
Bye, guys.
See ya.
Thanks, Sean.